So the question was asked by Lisa the to discuss how powerful the weekly channel line is. Now we're talking about the SPY. Looks like the bottom of that channel is holding for the SPY. Are they more powerful than the daily? Same question, read monthly, etc. And the answer to the question is yes. The longer the term, the stronger the stronger the trend. So this is the 200-day moving average. Now we're a long ways off the 200, but this you can see when it popped down here. This was key. Then actually the 50-day moving average moved through the 200. That was a big buy signal right there actually. And look what happened, off it went. Then it came back down and it did come close to the 200 here on this big pullback and held that. This is the most powerful line, the 200. And then the 50-day moving average. And then if you get shorter than that, the shorter the time frame, the less reliable it is for the patterns. Now this is a typical one, the 20 and the 50. We see that they never did cross here, and so never did give a sell signal. Here they're both rolling over, but so far they have not given a sell signal. Here was your buy signal when the 20 broke through the 50. You can see what happened. Here it touched it, didn't fail. It failed but didn't break through, and off it went again. So now this is a daily chart, but you can see that on the weekly chart, this line is exactly the same. So there's no difference between the daily chart and the weekly chart. But if you go to a monthly chart, I mean, you can see how powerful this is. This is the 20 month, this is the 50 month. There is your big buy signal there. There is your sell, there's your big buy back in 2011. And it's never been a sell since. Came down, held support, held support, held support. So, but that's the long term chart. Now, so by the same token, if we shorten this up, these lines that I have on the longer term, they don't mean anything, really. If you could find them at the support levels, that's about the only thing. Any of those lines, they don't mean anything. But when we're trading, we're trading with shorter time frames. Here on this one, this is the 2-minute chart, and so for a day trade point of view, this is of interest to us. These lines and that, but they don't really correspond to the longer term chart, except for key support levels here, 375, 380. Those are key support levels, so our lines will see those. But in the day trading, we're more interested in these shorter term lines that we're drawing. You always want to look, before you do a trade, you always want to look left to see where we're at, where we've come from, where we're at. We see 375 is the support in here. We see 370 is a big support. We see 380 and 385 are resistance areas. So keep that in mind when we shorten up the chart. But from a longer term perspective, these big channel lines here, I mean, that's the direction. If it busts that, then it's probably a bear market. And the 200-day moving average, even the 50-day moving average is more powerful. We can see that it's starting to roll over, so that's why I'm somewhat concerned here. But we see here it did break down through it, and they never did cross, though, never did give us a sell signal. I mean, there's your sell signal there. There's your buy signal there. If you're looking at moving averages, which a lot of people do, the 200 being the most key one that people are watching on the longer term.